please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A very good morning. Welcome to Chartbusters. Well, things are looking very, very good here on a Monday morning. The Nifty is up close to around 80 points. The Nifty Bank as well is participating. Sensex is up 250 points. Mangalam, we could not have asked for a better start to the week.
Couldn't have asked for a better start to the week, which is truncated. So we have a holiday. We have a good end in place. The start is also fairly good. The PSU Bank still struggling a bit, but what is good is the Midcaps outperforming. They did that on Friday and they're doing that today as well with a stronger market breadth. 3 stocks in the green for about 1 in the red. So that means maybe the street believes that perhaps the downside for our markets are limited. The frontline index at least is limited, which is why they're playing via these mid-caps. We'll talk about the markets as well as individual stocks, but first up, all the top stories that we're tracking at this point in time. Pharma major Dr. Reddy's received the Establishment Inspection Report, EIR as we know it, from the US FDA for its formulations facility in Srikakulam, Andhra Pradesh. The stock remains weak as the facility will continue to be under warning letter and may require one more re-inspection.
And Sun Pharma subdued in trade as the US FDA issues 3 observations to the company's Halol plant, which has been under the US FDA scanner since September 2014. Brokerages remain skeptical on the stock as Nomura expects the EIR for the Halol facility to take up to 6 months, while Kotak Securities believes valuations already factored in Halol plant recovery.
Shares of Zimbabwe Sugars tanks in trade today after the CBI registers a case against the company for defaulting 110 crore rupees loans coming in from Oriental Bank of Commerce. That one too takes it on the chin, down 11% in trade.
And shares of Sterlite Technologies gained more than 5% on the back of an order win worth 3,500 crore rupees to design, build and manage the Indian Navy's communication network.
A subdued debut for Aster DM on the bourses after listing at a discount of around 4% versus an issue price of 190. The stock has fallen further, down about 6% as we speak.
Okay, things looking good actually for us. We're up close to around 75 points. One would have taken that. Remember, we were up close to around what, 100 points plus in Friday's trading session. So a 75-80 point bump up is something that the bulls will really like. But Ashwini is with us. Ashwini, are you happy with the move that we're seeing on a Monday morning? Can the second half be even better? Is there a trade basically at these levels?
See, the theme that is playing out is that people are selling into PSU banks and they are buying into private banks. Now that by definition works very well because that propels the bank nifty higher, and if bank nifty is moving up sharply, that also tends to take nifty along with it. And the other one is aviation that's having some sort of a fresh breakout. So I would think this theme of PSU money moving to private has just about started. So you could actually have another good day on the Nifty as well as Bank Nifty. So people need to probably remain long for the rest of the day. As far as individual stocks are concerned, Indigo is a buy with a stop of 1325, target of 1380. PC Jeweler is a sell with a stop of 325, target of 310. And Ahluwalia Contracts is a buy with a stop of 388, target of 410. Some of these smaller infra construction plays are also doing well.
Good day to be long on the Nifty and the Bank Nifty. Ashwini, your stop loss would be on both these indices?
Well, for the moment on Nifty, I think Friday's close can be a decent stop. But the first hour, you're already gaining 280 points on the Bank Nifty. That whenever that happens, it generally tends to portend for a strong up day. And similarly on the Nifty, I think 10,500 thereabouts is a fairly decent stop.
All right, fair point, Ashwini. There, the up move in today's trading session also brings up the case for some short covering the FIs. They're just 47% long in index futures. But we'll talk about the markets, the secondary markets in a bit. Primary market action on our radar. HE Infra Engineering, the company on our radar, they start their 462 crore rupees IPO today. We're joined by the Managing Director, Mr. Harendra Singh, in our studios. Thanks a lot, Mr. Singh, for joining in. 463 crore in terms of the money that you're looking to raise via the IPO. 300 crores is fresh issue. I read that you're looking to repay some debt. What is the total debt on your books and what is the cost of finance?
See, the cost of finance is about average at about 9%, and the total debt remains at 30th of September. It is 350 crores.
And you are looking
outside as say long as well as short term.
Okay, and out of that 350 crores, how much would you be repaying from this 400 odd crores that you're raising?
This is 115 crore to be repaid with this IPO money.
Okay.
And say 90 crore would be the further capex addition that which you are looking for next year.
Okay, just to get these numbers right, I think last year you did a net profit of around 49 crores approximately. If you're saying that in fact you're going to be repaying around 115 crores, that means you can easily add 10 crores of interest saving. Is that correct?
Yeah. Quite right. We would be in the tune of 10 crore that would be added to the PAT.
To the PAT. And you're saying that you're raising 460 crores, 115 crores, you've explained to us.
Yeah.
The remaining 350 crores, why are you raising?
No. Say, there is a fresh issue of 300 crores
300
and 6 million shares offer for sale.
Okay.
So that way 115 crore for debt.
And the remaining 180?
And 90 crore for the capex addition for coming year 18-19.
Okay.
And remaining in the general corporate purpose.
Okay.
Yeah.
Okay, so if we take a look at your revenue, you know, that's grown pretty substantially over the last 5 years at 32% on a compounded growth basis. Last year you did about 1,050 crores. The first half of this year you've done 600 crores. You are incurring some capex. What is the kind of revenue we can expect in say FY19 and FY20? So
the number which you are saying is 1,050. It is a console number, basically a JV also. 970 has been the standalone number. Okay. And this year, say first half has been quite good, 545 crore that we did in first half.
Right.
And the unexecuted order book, it is about 3,700 crores as of November. For the coming 2 years, it is to be done.
Okay. You know, what we want to understand, Mr. Singh, is that you've been growing at a fast clip. So, you know, say FY19, FY20, your investors would want to know that HG Infra, what kind of a revenue number can we look at? Are we looking at 1,500 crores? Is that a number we go with?
Where? For the next year?
In the next couple of years. That's by FY20.
See, the government is having a very clear focus about that they would be awarding this much of kilometers,
yes.
say 50,000 kilometers in the current year. For the next year as well, 2022, they are looking at the, say 85,000 kilometers for Bharatmala project. So that way we are looking ahead that we could.
Out of that, how much of market share would you like to take? If they're doing 50,000, you know, what kind of a market share would you like?
You cannot be very specific writing what kind
I'll tell you
what.
Let's keep it a little simple. The government would like to give a lot of orders. Of course, they have their targets, but you are sitting on 3,700 crores worth orders right now.
Yeah.
That will be executed. So say 1,200 to 1,300 crore worth revenue expected in FY19 with say 15% margins. You've done 14% for the first half of FY18.
We cannot comment on that, what would be the number that we will be concluding so for the
I'm commenting, year. Just deny or confirm.
No, it's like that. Okay. We are looking at those numbers.
You know, Mr. Singh, one fear in the market is that most of your orders are concentrated in a couple of states. I think Maharashtra and Rajasthan, is that correct?
Yeah, quite
Close
right.
to around 80-90% comes in from both those two states?
Quite right.
Both those two will be going to polls, you know, in the next 1 year or so. Would you like to, you know, move to other geographies in the country, or would you be focusing on both these two states itself? It's
not that. Rajasthan is our home state basically, and the areas which we have already worked, we have worked in Haryana, just recently completed one project. Uttarakhand, we are working. UP, we have worked three projects were there. Arunachal, we are working. So it's not that we are confined to this Rajasthan and Maharashtra. We are open to many states. And looking forward. No, what I'm trying to understand, sir, from an investor's point of view is, will you look to reduce your dependence on just two states? Will you be looking to spread across? That's the point that we're quite specific. And incidentally, it's as of now 80-90% is from Maharashtra and Rajasthan, but it's not that. We will be looking for many of the states.
Finally, before we let you go, you know, a lot of these companies that we speak to, the infra EPC players, they have stretched inventory days. You are working with what, 35, 40 inventory days, 40 days in working capital. That's pretty lean. How do you do that? And what are the levers for that improving further, or maybe we can see some deterioration there?
No, the inventory days, say 35, 40, plus whatever you see, like the unbilled revenue is again there. So the net of working capital is coming at about 55 days as of now.
That's still lower than your peers.
Yeah, obviously. And going further, if we are more into EPC, then it can be, say, within the range of 50 to 60 days.
Stock that is busting the charts right now is Sterlite Tech, up around 6.5%, 7% as we speak, on the back of an order win that the company got worth nearly 3,500 crore rupees coming in from the Indian Navy. So to discuss more on this, we have Anand Agarwal, the CEO of the company, joining in to detail more. Thanks a lot, Anand, for joining in. 3,500 crore worth revenue coming in from the Indian Navy. We understand it's spread over a decade. So what does this mean in terms of recognition of revenue? When do you start executing this, and how much does it add to your revenue?
Sure. Thanks for having me. Just to clarify, it is an advance purchase order that we've received. So the purchase order will follow in the next few weeks, maybe 4 to 6 weeks. Post that, this will be executed over 2 financial years, so FY19 and FY20. And it's about 75% of the total order is in CapEx form, that is to build the network. And the rest would be to essentially to maintain the network for a period of 10 years.
All right. So if we get that right, that means in the first 2 years, bulk of the orders will flow into revenues. Is that correct?
That's right. That's right.
All right. So out of the 3,500 crores, safe to assume that 2,500 crores odd will flow in the initial 3 years?
Yes. Yes.
Okay. That adds that bumps your revenue up by what, a good 30% as we see, because the first 9 months you've done about 2,300 crore rupees, 1,250 crore worth addition to your annual revenues would mean a 30% growth.
So we've been growing at close to 30% in terms of revenue over the last 5 years or so, and our EBITDAs have been growing at about 45%. So in terms, and that has been on the backdrop of a very good, strong optical fiber manufacturing business. So this system integration is something that we recently embarked on. So this should add on to the growth that we get naturally as well.
So FY20, 5,000 crores is a given, it appears so, isn't it?
Should be. Yeah.
And the other point I wanted to focus on is your margins. You're talking about your margins going ahead as well. I was just looking at your last quarter. There's a big bump up in terms of margins. What could be a sustainable margin number that we could work with? The last number that we have is around 24%. 20 to 24%, that's the range?
Yeah, the margins are a reflection of, so our products business have better margins than the system integration. System integration margins are in the 12-13% range. And depending on the revenue mix, the range that you indicated, 20 to 24% would be a fair range.
So 20 to 24%, if we take a look at your margins, you're talking about 5,000 crores in terms of revenue for FY20. Does that mean you go ahead and do 1,100 crores on your EBITDA level in FY20 as well?
We've given a direction that will achieve close to 100 million net profits by FY20, and all these events, activities, and revenues are going to be helping achieving that. So all the numbers that you're speaking are in the ballpark range, and the order book that we have before this order was already close to 4,700 crores. This once the order gets added, it will bump it to in the range of 8,000 crores. So that will give us a pretty healthy tailwinds to go and execute.
You spoke about your order book. It is at a lifetime high. Add to this, it goes to around that 8,000 crores. We understand that. If you could tell us about the order inflows. So far, what is the visibility on order inflows? What kind of inflows do you expect in the next year and the last quarter?
The order inflows have pretty strengthened over the last 1 year or so. So a year ago, we were at about 2,700 crores. We bumped it up to almost 4,700 crores when we closed the previous quarter. So the order intake is really moving much faster than the revenue shift that we see. And that is giving us a better visibility and a better growth rate that we see in the next few years. I won't have the exact numbers, but essentially because of the fact that the system integration projects are bulk and lumpy ones, so this project itself will boost our order book by 60%. But I can tell that we are pretty much looking at pretty great opportunities at a global level. The fact that our revenues are now about 50% India, 50% global. And all this is at the backdrop of the data growth that we are seeing globally.
We're talking...
And that shift is pretty longish term.
Mr. Agarwal, we're talking about good order book. Will you be requiring some money? I mean, how do you fund all of this? this huge order book, massive surge in terms of revenues, and also what is the current capacity utilization levels? Do you have to set up some more capacity?
We are already, so the current capacity utilization for 30 million kilometers is already running at full.
Yeah.
And we have taken a call to go towards 50 million kilometers. That will come by June 2019.
Okay.
For which we are spending about 1,200 crores. Bulk of that 1,200 crores should come from accruals. Once this order is finally confirmed, we'll look at our balance sheet positioning, and we should take a call as to whether we would require any funding or not.
Okay. What is your balance sheet positioning right now? What's the debt on your books, if you could tell us?
Currently, it's close to 800 crores.
Okay, fair point. Thanks a lot, Mr. Agarwal, for joining in and giving us those details. That's a confident-looking management of Sterlite Tech. We'll go ahead and see whether the financial performance matches the word. But
come off a tad bit from the high point of the day, so just keep an eye out on the markets. I think Yes Bank was one stock that had slipped from the top, so keep an eye out on that stock. But a couple of other stocks that we're looking at, I think we should pull up the futures plate of Vedanta as well as Hindustan Zinc. So let's get both those two up for you. Both the stocks, remember, they're moving higher in today's trading session, Vedanta and Hindustan Zinc. It appears that, in fact, the street is factoring in maybe a potential dividend that could come about before the end of this fiscal. I think at some point of time, the director should get both those two up for you, the futures plate of Vedanta as well as Hindustan Zinc. But I think we'll wrap up on the show. As we do that, let's wrap it up with the CNBC TV18 exclusive. I caught up with Sanjeev Gupta, the executive chairman of Liberty House, and began by asking him about their plans, the way they're approaching the NCLT on the Bhushan Power and Steel. Also, what's the way forward?
So we are asking the NCLT court to consider whether, on the basis that we believe our bid is superior, that we should be allowed to have our bid opened and considered.
Okay, all right. So you have already approached the NCLT. You're going to do it today?
Yes.
Okay, you're saying, Mr. Gupta, that your bid is superior. The details that we have, our Tata Steel has, offered around 17,000 crores, price around 7,000 crores. So ballpark around 24,000, 25,000 crores. Your bid is superior, means it's better than that?
It is, but we cannot. I mean, that is for the for the committee to open and see. We cannot. I cannot go into details of how it is superior, but it is definitely superior. It's
definitely superior in comparison to what Tata Steel has offered, sir.
Right.
Okay, all right. So Bhushan Power and Steel, that's something that that we're working with. That yes, Liberty House has gone ahead and put in a bid over there. But what about other assets? Have you put in a bid for any other ferrous assets? Maybe an SR Steel? Have you put in a bid over there? And if not, why not?
We had to choose. We cannot bid for everything, so we had to choose. We want to enter specific sectors. We want to enter the primary steel sector, so we chose Bhushan Power. We want to enter recycling of steel, so we are going to bid for ABG to break ships there and recycle them. We wanted to be in the auto sector, so we'll bid for Amtech.
Okay, incidentally, let's talk about Amtech Auto. We'll get back to the ferrous subject. But in terms of Amtech Auto, what we understand is that the COC, that's, the committee is likely to meet either today or later this week. What's the update on the bid over there? What have you put on the table? Initially, the talk was that, in fact, all the bids that have come in for Amtech Auto, they are not up to even the liquidation value. If you could give us some details, your rationale over there, what kind of money have you put on the table for Amtech Auto?
No, see, any of these processes, I don't think it's appropriate to talk about numbers or what we bid and so on. In principle, strategically, it is a great fit for us. We've already bought the Amtech Auto businesses in the UK from the UK RP equivalent, and those businesses are already integrated with our business and are already very successfully turned around. Similarly, in India, we're very confident that if we win Amtech Auto, we will be able to integrate that with our business, which is the largest in the UK now in the sector, and we'll be able to make it a great success. So that is the reason and the basis on which we are bidding for these assets. We believe we will be a good strategic fit, and hence we will be able to make propositions which are superior to others.